Hello, my friends. Jeff, Tax Rescue CPA. Do you have tax debt that you can't pay in one lump sum? Yeah, it can be a little frustrating and intimidating on dealing with the IRS on what to do about this. But the IRS has 3 different ways that they will work with you to resolve this tax issue. Today we're going to dive into those and find out which one is right for you. So let's get started. All right, the first program we're going to look at is the option of the Offer in Compromise, or OIC. What is this? Well, this is the program you'll see on late night TV commercials that talk about how the IRS will settle your debt for much less than you owe. And it's true, they will. So who does this program work for? This is a program that's designed for people that they may have had a significant taxable event at one point in their life, but at this point they're not making a whole lot of money, they don't have a lot of stuff. Well, okay, Jeff, what are they going to consider in this process of your application and you requesting this program? Well, the first thing they're going to look at is your assets. And then they're going to take those assets and they're going to reduce that value by any associated liability. So, for example, you have a house or a car and then you have a loan on those items. They'll take the net amount. Then they're going to look at your income, and not just your taxable income, but any other sources of income that may not be taxable, but it's still money coming into you consistently, monthly. They'll look at that. And then they'll take into account, of course, your expenses. And some of these expenses they'll take into account your actual expenses, and some of them you'll be allowed to use a standard amount based on the guidelines that the IRS uses based on your family size and geography where you live. So what's the secret to this program? Well, the secret is to know that the IRS does not hand out these offer and compromises easily. There's a fairly extensive application process, and the application time or the consideration time is usually well over a year. 12 to 18 months is the processing time for this application to get approved for your offer. Well, what about the application process? You're going to need to submit fairly detailed financial records, and also a lot of details about just what's going on in your life, and a lot of statements to facts about your financial situation. And then the IRS will assign an agent to review all those details and confirm. So there'll be some conversations back and forth with the agent where they'll call you, they'll want updates, they'll want additional information, they'll work through any questions they have. And if anything happens, any changes happen during that application process, that can kind of reset the numbers, and you have to kind of do this again during the process. For example, if you move, that can cause a reassessment of your application in total, and you need to submit new information. This is a fairly involved process, so you need to know that going into it and be aware. I have a video here where I give some more details about it. Feel free to check that out. As far as a pro tip, the IRS has a really good online tool that you can use to see if you could potentially qualify. Here is the link to that. Check that out online. Now, which one's next? The next one is called Currently Not Collectible. And this is a status that the IRS puts you in. It basically puts you in a category where the IRS puts your account or your debt into a timeout and says, you know what, we are not going to actively pursue collections from this taxpayer. Well, who does this work for? This works for somebody, again, kind of like Offer and Compromise, where at some point in the past, you have had a major taxable event and you have a fairly significant tax liability. But at the time, at the moment, currently right now, you're not making a whole lot of money. In fact, you can show the IRS that your income isn't high enough to allow any money left over to pay on this tax debt. You basically need to convince the IRS that you only have enough money for the basic necessities and there's nothing left to give them in payment or in making strides on this tax debt. So what's the IRS going to consider in this? This program is a lot more focused on your income and expenses, and rather than your assets, because you're not, unlike the Offer and Compromise program, you're not telling them, here's everything I have. You're basically saying, look, my monthly cash flow isn't such that there's anything left over for you. So what's the secret to this program? Well, the secret to know is that interest and penalties on your balance will keep growing while you're in this timeout. And the IRS can cancel or take you out of currently non-collectible if your income increases. Okay, so that's good. Here's another little secret. And this is kind of the backdoor way to get in what basically amounts to an offer in compromise. The IRS has a limit of 10 years that they can collect on a tax liability once it's assessed. And being put into currently non-collectible CNC does not pause that clock. So if you get placed into currently non-collectible, that clock still runs. And if when you get placed into it, say there's only 4 more years left on that clock, well, at the end of the 4 years, that tax debt for that year, now this is taken into account each year individually. So if you have multiple years of tax debt, those debts will fall off of your account or get written off at different times. But once you hit that 10-year mark, if there's been no other pauses or reason to pause that clock, the tax debt will go away. And it basically serving as the same result as an offer in compromise. So why would you be interested in this program? Well, the application process is much simpler. Again, the IRS doesn't have to go through and verify your assets in the same way. They're basically looking at your income. And, the IRS has most of your income information on hand from the annual documents that get filed related to your income, like a W-2, for example. So the IRS has a pretty good idea of how much money you're making. And the expenses, that most of them are based on standards that have been established based on your family size and where you live. So it's fairly easy for the IRS to process and get the information they need for the application to this program or your request to be placed in currently non-collectible. And in fact, that's right, I got a video right here. You can check out more details about currently non-collectible. This one, though, to go back to this, is that the application process can be as simple as making a phone call and being placed into currently non-collectible relatively quickly. Again, this is in comparison to the offer and compromise program. So my pro tip on this is to be sure you have all your ducks in a row, everything in order before you call the IRS and begin to give them the information they need to consider your request to be in currently non-collectible. It's much easier to call the IRS one time than to call back with more information and more information. So get all your financial information ready, make that call, and see what they say. Now, we're on the last option. You're saying, hey Jeff, those don't work for me. The offer and compromise, I have stuff and I have a fairly significant income, and the same with the currently non-collectible. My income is too high. I'm never going to convince the IRS I don't have any money to send them. Well, welcome to the club. This is how the vast majority, over 90% of IRS gets dealt with, and that is with an installment agreement. Okay, so an installment agreement, what is this? Well, it's just like it sounds. You're going to take your tax debt and you're going to break it up into little chunks and pay the IRS once a month. You're going to make a payment to them, working your way down on that tax debt. Okay, so who does this work for? This works for basically everybody else. There is most likely an installment agreement. The IRS has several different versions. There's most likely one that fits for you. So this is kind of the default, as I'm saying, and this is why I saved this one for last, because this is where most people are going to end up. So what's the IRS going to consider in an installment agreement request? Well, basically two things: how much you owe and how long you have to pay it. And sometimes that time frame is based on the particular requirements of a specific installment agreement, and sometimes it's based on how much is left on the IRS's clock to collect on the debt. For example, if you've dodged payment for this for 7 years, and the amount of time that the IRS has left to collect on this debt is only 3 years, they're going to structure your payment so that it'll be paid in, that's right, 3 years. So some of this has to do with the particulars of your debt, but those are the things they are going to consider. So what's the secret to this? Well, the secret is if you owe less than $50,000, it's a fairly streamlined process, and the application can actually be submitted online. Now, if you owe more than that, or you're asking for some special consideration, there's a ton of them. I won't go into details here. Well, that's right. I've got a video right here with more details about the installment agreements. But nevertheless, if you have these extra circumstances that are going on, or you owe more than $50,000, that's a little more involved. Get on the phone, submit the application, negotiate an installment agreement that works for you. Well, what do you mean works for you? Well, here's the pro tip on installment agreements, because I've seen this happen time and time again, is make sure you agree to a payment that you can actually afford and make and pay every month. Because what happens is if you stop paying on this and default on the installment agreement, it makes it much more difficult to get another installment agreement. Excuse me. And then what happens is the IRS gets more aggressive. And this is what we're trying to avoid with all these things, right? As if you don't work out some sort of agreement or method of dealing with this debt, the IRS is going to come and take the money from you. They're going to levy your bank account, they're going to garnish your wages, they're going to find some way to take things from you in order to get the tax debt paid. And defaulting on an installment agreement is not a good step in the process of resolving your tax debt. There you have it, my friends, the three options you have for proactively dealing with your IRS tax debt: offer and compromise, currently non-collectible, or installment agreement. Now, if you have any questions about which one of these is right for you, here's your certificate for a free tax review. Get the answers you need. Thanks for watching. Now go deal with the IRS. Who's doing your taxes?